Good morning. Welcome to Friday's Trading Hour. I am Reema Tendulkar. With me is Sonal Bhutra. After negative start, things have flattened out for the market. It's got a tinge of red going for itself. So just down close to about 26 points in the Nifty. The Sensex is down 45 points. Mid-caps bleeding a bit, but then they were relative outperformers for the last 2 days. Banks under pressure, and there are two big triggers to watch today. One, China NPC and what's the outcome. And second, the State Bank of India numbers, which will come out in the second half of the year. Hi.
Yeah, expected during market hours today. So that'll be the big earnings to watch out for. But the IT space, that continues to do well, Reema. We did see some profit booking yesterday, but this index has made a comeback. And we've been talking, and Reema has been highlighting what happens to the IT space whenever Trump comes back. The IT index is up 1.1%. We have the FMCG space, which is doing really well. And while the broader markets, they are under pressure on the index level, there are a lot of moving parts. If we talk about stock-specific moves, Motilal Oswal, for instance, that stock has surged to the day's high. It's up around 9% right now. We have ITI on the back of that being that lowest bidder for the BSNL order. That stock is up around 7.5%. You have Indian Hotels after a good set of numbers. That stock is up 6%. Avalon Tech was up 17% yesterday. That continues to be the case today as well. So a lot of moving parts as we've been talking about, and we keep discussing and analyzing that for you in great detail as well. Let's start with the first management on the show, ITD Cementation. That's the stock that we are tracking. Posted a good set of quarter-two earnings with revenue and profit surging. However, the margins have contracted. To discuss the quarter-two earnings and more, we are now joined by Jayanta Basu, the Managing Director at ITD Cementation, to take a few questions on the earnings and a lot more because there has been a transfer in the management as well. Mr. Basu, good morning. Thank you so much for joining in. Well, you know, I'll definitely speak about the earnings, but I have to talk to you about how there has been a change in the owners. Now you're an Indian-owned entity. Can you give us a sense of what happens to the current management post open offer ending? Has there been any communication from the Adani Group in terms of the management and the vision going ahead as well?
Good morning. Thank you for inviting me. As you all know, that there has been some transfer procedure going on. It is still under process, so I don't want to comment much on that. Basically, the open offer may come in sometime December. SP has been signed, so that much only I can say at this moment.
Then can you tell us, Mr. Basu, about how the valuation was arrived at? The stake sale is taking place at 400 rupees per share. How many bidders were in the fray? Tell us a little bit more about the valuation process and how did the promoters agree to it?
Well, I think there had been an intense discussion between the promoters and the buyers. There are three prospective buyers, NMDC, KEC and Adani. So between them and then with the promoter, existing promoter, they have a discussion. So I was not privy to that, so I'll not be able to comment much on that.
The bids by the other two interested parties, KEC and I think NBCC is what you said, right?
Yeah, NMDC from Abu Dhabi.
Okay, sorry. Was it lower than the offer made by the Adani Group?
I really don't know. I really don't know.
Okay. Have you been communicated anything from the Adani promoters about how this company, should, go forward from here on, say for the next 5 years? What is their ambition?
Well, there has not been any specific discussion, but as we are working with Adani for several years, particularly myself is working with them for 20-25 years, so I know a bit of Adani, how they work. I can get a sense that they have got a lot of internal infrastructure development, a lot of factories, a lot of projects they'll be undertaking coming few years. So they think that we'll be able to contribute more than what we are doing today if they take us. That is the idea.
Sort of like a captive buy for them? For captive
Not really, because this will be a independent company. That much I know. But there'll be more job from Adani than what it was before. That is what I think so.
So today, what percentage of your revenues or portfolio is from the Adani Group?
Today, out of work in hand, I think more or less 25 26% of the work in hand is from Adani today.
Okay. And have they already indicated which projects they would like to take you on for?
Not really. Basically, most of the marine job what they do, we are there always. Whether they have taken over or not, we are always there. They may ask us to do some more job. Let us see how it goes. Yeah.
Okay. All right, Mr. Basu, that is all about the new acquisition by Adani Group of the promoter holding. Let's talk about business now. There has been some compression on margins this time around, right? 9.1% versus 9.8%. What is it that you're targeting in FY25? Do you stick to that 10% guidance on EBITDA margins? And what about revenue growth? Is it going to be 15 to 20%?
Well, revenue growth, before I talk about future, what has happened last quarter? One is the monsoon, which is the common factor every year. If you see that last year or second last year pattern, always second quarter is little down than first quarter because of monsoon effect. And mostly this time, Ganga Expressway, which is the road work, which is affected by the monsoon, that is a big revenue earning job for us. So that is one area. Second is the Bangladesh project, which is affected because of the local political issue, as all of you know. So that is why this quarter is little bit down. But compared to the earlier years, I think pattern is same. So that is over this quarter. But going forward, definitely third and fourth quarter is always better than previous two quarters. So we hope that it will be maintained. And the revenue growth of 15-20%, yes, it will be there.
And order inflows of 8,000 to 10,000 crore rupees, you had earlier revised it upwards of 10,000 crore rupees. Is that something which is on track, considering all the issues that you just mentioned?
Yes, I think it will be close to 10,000 crore, if not 10,000. Has to be, yeah.
And how big is this Bangladesh project, which hurt you all in Q2?
Bangladesh total value is around 1,500 crores.
Okay.
We are supposed to do around 150 to 200 odd crores during this quarter, which we could not do much.
Has it started, sir, or is it pushed back even further?
No, the good news is that it has started, and with all there are other few companies as well working in Bangladesh, like Ircon, Afcons, L&T. So we are working together with Indian Embassy, and there's a green signal. So our people has all moved back, and I hope that by end of this month or beginning of December, we'll be able to resume the work.
So is this the Bangladesh order only which led to order book declining a little bit, Mr. Basu? What are the prospects? What is the order pipeline looking like now?
I think so far we have secured around 3,500 crore job so far this year. But the jobs which are in pipeline, close to about 30,000 crores in different stages. Some we have already submitted or bid, some under process. So I still maintain the guideline of around 10,000 crore work to be secured in this year.
Okay. Thank you, sir, for joining in. That's Mr. Basu from ITD Cementation. The stock is up 1.5%. Talking about business ownership, the way forward for the company. Get into a break. We'll come back and discuss commodities. Manisha Gupta will be back with us.
Welcome back. You're still tuned into Trading Hour. It's time to talk about the commodity space. Manisha is joining in today, and today we are focusing on palm oil. Manisha, what's the update?
Well, it has been very volatile in sense of commodities when you look at last 24 to 48 hours. And I'm looking at palm oil prices because we've seen very strong gains come in for this one. It's a third weekly gain that we have seen come in for this. It's trading at above 5,000 Malaysian ringgit right now, which is the highest since June 2022 highs there. The markets are looking at production, which is expected to decline in the major producing countries. That is one reason that has been keeping prices in any case on the higher side. And then it has been seasonal rains. Markets also are looking at Trump, which could put in strict sanctions perhaps on some of the oil-producing countries like Iran and Venezuela there. Indonesia's plan also to increase biofuels mandate is something that has been keeping prices on the higher side. So as of now, when you look at palm oil biofuel blending for this current year, it's at around 35%. By 2025, it's anticipated at 40%. And recently, a B50 mandate has been put out for 2028. So that means as much as we are consuming in sense of an edible oil, palm oil also seems to be going in equal amount for the fuel as well. Now, when you look at the Indian markets here, when it comes to palm oil imports, well, we saw 59% of a jump up on a month-on-month basis for the month of October. So that also tells you that the demand continues to be quite strong. The prices in the meanwhile for the week are up by nearly 2.5%. For the last 1 month, we've seen prices gain up by 18%, and it's 35% up for this current year right now. So palm oil within the edible oil sector and various other soft commodities as well seems to be clearly outperforming.
Thank you very much for that. Get into a break. On the other side, we'll invite the second management on trading hour. That's Alembic Pharma. It's been a bit of a tepid quarter for the company. Top line growth of only 3.5%. But is there a recovery in store? Pranav Amin of Alembic Pharma joins in next. Welcome back. Matrimony has taken a bit of a tumble today, down nearly 9% on the back of the Q2 numbers, and it's a disappointing quarter. Revenues have fallen quarter on quarter. Revenues are down 5% plus on a year-on-year basis. And this is now the second consecutive quarter that revenues have declined on a year-on-year basis. Margins too have seen a fall on a sequential basis, so that's another area of disappointment. And the problem is that even their billings, which indicates future growth, that is negative. So the sense is that perhaps the second half of the year is also going to be weak. Now, almost more than 98% of the revenues comes in from that platform business, which helps in matchmaking. But they have a very small business called marriage, where they help conduct the entire services, etc. But that's a business which is not doing well for them at all. They've not managed to scale up the top line, and the EBITDA loss for this marriage business has gone up. So that's something that's hurt the company's margins too. So on the whole, very disappointing, but we've got the management joining us later on in the channel to talk about the way forward. For now, it's Alembic Pharma's quarterly update that we'd like to take note of. The company's seen its net profit and EBITDA surge on a year-on-year basis. Margins are now stand at 14.5% versus 13%. But the reason perhaps why the stock is down 1.5% is because the top line growth has been missing for the company. This quarter, the revenue growth is at 3.3%. And for the last 4 or 5 quarters, we've seen a single-digit kind of a revenue growth for Alembic Pharma. But at 3.3%, this is the lowest in terms of a growth rate, at least in the recent past. Pranav Amin, Managing Director at Alembic Pharma, is now with us on the show. Pranav, thank you very much for joining in. Let's talk first about your domestic business, and then we'll get to the international US business, etc. Now, in the domestic business, the animal health, which is a smaller portion, has done well, 20% kind of a revenue growth. But acute and specialty has been a bit subdued. Tell us what went wrong, and is there a recovery in store?
Hi, good morning. So the India business was a mixed bag. There were some sectors within the segments within the India business that did really well. The ones that did well for us were some of the specialty ones that we've been focusing on, such as gynecology, ophthalmology, diabetes, cardiology. So those have grown pretty well. In terms of animal health, that has been going gangbusters for us over the last 15 odd quarters. That's still picking up a lot of momentum, and we're spending a lot more on that in terms of new launches and new products. So that's good, looking quite good for us, and I expect that to continue growing. Acute was a little slower. I think for some odd reason, we couldn't pick up the ramp up in the acute. The market itself was much slower on acute. Hopefully that will recover as we go along. So let's see how that goes.
So are we expecting second half to be better than the first half, Pranav? What is the outlook now for the domestic business?
So actually, in terms of the outlook, I would rather give an outlook for the entire company. And I think the second half should be much stronger due to a variety of reasons. So if you see the international generics, right, the rest of the world generics, Q1 was rather subdued. Q2, we went back up to 18% growth. We had a lot of supply constraints in the first quarter and half of the second quarter. So we should see this kind of 15-20% growth going forward into H2 for the rest of the world generics as well. The US generics as well, the H2 will be much stronger. We had 8 launches in this quarter, but generally what we do is we slowly ramp up our launches. So we will see a lot more momentum coming in Q3, Q4 of this year. So US should get back to a much healthier growth rather than the 6%. It should be closer to the 10, 15% growth for the next couple of quarters. The only dampener in this, in terms of the top line, has been the API business, which pulled everything down, which degrew by 15%. There's some structural changes that have happened in the API business. We're seeing a lot more competition and pricing pressures on the API business, which has caused this. I expect another quarter or two to still last, and then we'll maybe with new launches recover that.
So just to summarize, is it fair to say that the India business, the domestic business, will see a mid-single digit kind of a revenue growth? Exports should see double-digit, while API will clock in negative growth, perhaps in excess of 10%. Is this a realistic framework to work with for the full year?
So the India business our goal is to grow faster than the market, at whatever the market's growing at. Our goal is to grow faster than that. The first quarter, it's been at or below IPM, but we hope to grow faster than that in the next couple of quarters. So hopefully that should happen. And as regards the rest of the world generics, yes, about 15 to 20% is what we should grow that for the H2 of the year. US business as well, we'll see 10 to 15% growth in H2 of the year.
Okay, and API will be negative growth for the full year?
Yeah, API, there's been some structural accounts that we've lost due to pricing pressure and increased competition from China and some other Indian companies. So that has caused this. I think as we go along, we'll see whether we want to recover those accounts or we want to get new ones. So I think another quarter or two, API will still be weak in terms of top line.
Okay, so the second half looks weaker in the API space. What does it mean for margins overall, Pranav? And in FY25, what are you targeting? And if things improve in FY26, will you see a better number on the top line and margins?
No, absolutely. And I think we have said in the investor communication that we do expect our margins, which are down to about 12%, 13%, to gradually inch up closer to the 18 to 20% in a couple of years' time. And that'll happen due to all the businesses moving forward.
You said on API, you're still deciding whether to, try and retrieve the clients that you lost due to pricing. So if you do drop your pricing, will it not hurt your margins? And if you don't, it takes some time to get new clients, right? So, how are you going to navigate this? What's the thought process? What are you veering towards?
No, it's a good question, right? And that's the main challenge that we face, because our API is a high quality, high margin business for us. We don't typically compete with the Chinese. We do try going at a more premium level in terms of better service, better quality. And so that's $1 million business for us. I think we'd like to keep our margins, but we will get top line growth. I think there are more opportunities as we go forward, and we should be able to recover on that as well.
So it's largely a pricing issue that we are getting from China, right? Because even I would say the chemicals industry is facing the same problem.
Similar, a little different, but similar. The other issue that we're seeing is there's a lot of data that is getting leaked out of India in terms of pricing and customer-wise, which is also creating a little bit of a havoc in the industry.
What's been the total loss in the API business due to pricing or the loss in customers?
I think.
Is there any other issue except this?
No, nothing. It's just pricing and there's one.
So how many customers did you lose?
It's very tough to say. It grows across the board. I think it's a mixed bag. So 1 or 2 customers had FTA issues. So of course the offtake is lower right now because they had FTA issues. The other one, we have two large multinationals who just had a lower offtake, and the balance is about 5, 6 customers, just large customers who there was a pricing issue.
Okay. Last question before we let you go. Is the company looking to participate in the GLP-1 opportunity, the 2 drugs there? Will you be participating in semaglutide and liraglutide?
So the GLP-1 is a very interesting area. As we're seeing, there's a lot of new indications. Liraglutide, no, we're a little late on liraglutide. Semaglutide, tirzepatide are something that we are pursuing. Semaglutide, we may be a little late for the US market, but we are still active on that. Apart from that, we do expect a lot more GLP-1s to come up. So we have built capability in terms of the peptides, the API manufacturing, as well as the formulation. And we will be investing quite a bit on GLP-1s as well.
Okay, all right. So we'll have a conversation about that separately. Thank you so much, Pranav, for joining in and giving us all those insights about what's happening with the company and the industry as well in general. That's Alembic Pharma. We'll wrap this conversation now and slip into a short break. As we do that, some exciting news for our viewers. Seize the opportunity to attend India's landmark economic summit. Show us you are a true CNBC-TV18 fan by answering a simple question in our super fan contest. Head over to CNBC TV18 social media channels to participate and get a chance to win a free ticket to CNBC TV18 Global Leadership Summit. Hurry, the contest ends on 10th of November. Answer now and you could be one of the 5 lucky winners. Welcome back. You're still tuned into Trading Hour. Well, the big number to watch out for today will be SBI's earnings. It is in focus ahead of its quarter 2 earnings. Abhishek is joining in to tell us what the street expects this time around. Abhishek.
SBI is expected to report a mixed set of numbers for the Q2 FY25 performance, with business momentum being on the healthier side but weak P&L. So deposit growth is expected to be close to 9% YOY and about 4% sequentially as per Motilal Oswal estimate. Again, Motilal Oswal estimates more than 15% YOY growth in advances and about 3.5% on advances growth on a sequential basis. Net interest margin can come under pressure. Now, Morgan Stanley estimates a 9 basis point decline on net interest margin YOY and about 2 basis point decline on sequential basis. Now, Kotak Securities estimates that OPEX will be lower and that can drive the operating profits. Slippages of formation of bad loans in this quarter is expected to be at 6,500 crore by Morgan Stanley versus 8,700 crore in the previous quarter. Now, Motilal Oswal estimates asset quality to remain stable or improve sequentially. They expect a slight decline in gross NPA ratio and net NPA ratio on a sequential basis. Management commentary with respect to unsecured loans as well as net interest margin outlook will be seen closely. Now, our poll suggests NII growth of 5.5% YOY and about 1.2% sequentially. We are working with a profit growth of 7.7% on a YOY basis and a decline of more than 9% sequentially. Back to you.
Thank you for that. The other big one is Tata Motors. Sudarshan is here with the key expectations. Sudarshan.
So Tata Motors has been under pressure ahead of its earnings. If you take a look at the stock performance, it's up 4% in 2024, but this week it's down 4% and it's down 31% from the record high hit on July 30th. If you remember, company had pointed out about muted global demand and constrained production at JLR level after Q1 earnings. So what do our expectations say for Q2 earnings? We are expecting a subdued set of earnings on the back of a decline in volumes. Overall volumes have fallen both sequentially and year on year. Also, JLR shipments excluding China JV have declined 10% YOY. Now, coming to the main numbers, Tata Motors consolidated revenue is seen falling 2%, while EBITDA and margin may see a minor jump on the back of an improvement in profitability and continued healthy demand for SUVs and electric vehicles. For JLR, as per limited estimate we have, expectations are of a decline in all the headline numbers. Revenue and EBITDA are seen falling 7% each, while margin may come in almost unchanged at 14.8%. In the commentary, few things that will be watched very closely are: first, update related to global and domestic demand; second, production and shipment situation at JLR; and third is margin guidance that company gives for FY25 related to JLR. So earnings in all probability will be muted, but all eyes will be on commentary related to H2, as there is an expectation of increased government spend in H2, which might help improvement in CV demand.
Okay, all right. Thank you so much for joining in with what to expect from Tata Motors numbers, Sudarshan, today. Let's move on and get a technical check on the markets. Vishal Mankan from malkansviews.com is joining in now. Vishal, there's been some recovery, but again, we are seeing some pressure of around 60 points in the Nifty. What's the next important level to watch out for on this in the Bank Nifty, considering big earnings expected today?
Yeah, hi. I think Nifty and Bank Nifty are finding their feet at the bottom, forming a bottom in the last few days, especially after the US election results have been out, and which is positive. So I think the intermediate bottom has been in place, and around 24,000, 24,100 is a good support where it can find a major bottom for the next few weeks. And from here, we can look at a rally of 24,600 to 700 in the next few trading sessions.
Stocks, what would you recommend?
I'll go with a couple of stocks, which is one of them is on the PSU banks, which is PNB, Punjab National Bank. It has formed a good bottom around 100 levels with good divergences on daily charts. So I'll go with a buy on that with a stop of 102 for targets of 112 and 115. And the second one would be HAL, which is already moved up quite a bit, but it looks like it has a breakout there. So we'll go with a buy on that with 44.20 as a stop and 45.20 and 45.60 as target.
Okay, all right. Thank you so much, Vishal, for joining in. We'll slip into a short break now. Vivek Parthiban of Caplin Point Labs will join us next to discuss their Q2 numbers and more. Stay tuned for that.
Welcome back. Let's invite the management of Caplin Point on the show now. Vivek Parthiban, the COO of the company, is now with us on the show. Thank you very much, sir, for joining in. So now in the first half of the year, you've clocked in close to about 17% top line growth. You're saying that Latin America continues to drive robust top line and bottom line growth. So can you give us the outlook for the second half of the year and break it up in terms of Latin America and US?
Thank you. So yeah, Latin America continues to drive maximum growth for us right now, but US is fast catching up as well. Of course, albeit on a small base, we are still looking at very decent growth in the US. But at this point, the breakup is at about 82% from Latin America and the other 18% from the US. We've been very consistent over the last few years, few quarters, etc. I think that also goes to show that the business model that we have, where we cater to the bottom of the pyramid, continues to work well for us, which is what we are going to be trying to replicate in the US as well.
Vivek, what my colleague meant to ask is, what are the growth rates that you're looking at in FY25? Will you be able to do this 18% mark or better than that for the entire year? And how would growth be from the Latin American geography and the US geography separately?
Yeah. So typically, H2 is equal or better than H1 for us historically. And what I mentioned with regards to consistency is the fact that almost 80+ % of our business is targeted towards the private market. So basically, we have a fair amount of repeatability, a fair amount of consistency with our business. There is no hit or miss kind of events that happens for us, So you can expect similar kind of growth for us for H2 as well.
Okay. Your oncology business, which commenced exports, has clocked in a 12 crore revenue in the first half of the year. For the second half of the year, what is the run rate? And you're saying it will be profitable in the first full year of operations. So that will be in FY25. What could be the profits we should expect from the oncology business?
Yeah, so oncology business typically is low volume, high margins. We don't want to get into specific numbers, but we are very confident of repeating what we've done in the first half, in the second half also. At which level I think we will turn profitable on this. This is, I would say, a bit of a rarity because typically any new capex takes about 3-4 years for, especially when you're looking at pharmaceuticals and finished dosages, etc. So this is pertinent because we've been able to do some groundwork on oncology products in our existing markets by way of outsourcing over the last few years, which we've been able to take in-house right now. This has gone some way into making this unit turn profitable within the first full year of operations itself.
Okay, so once it does scale up, Vivek, what kind of revenue number are you targeting? And since it's oncology, it'll be high margin business, right? So how would it contribute to your margins going forward?
Yeah, I think at a company level, we are either, better than benchmarks. If you look at companies our size, our EBITDA is close to 35-36%. The oncology business will go in some way to augment this, but at any level, I don't see us reducing this either on an entity level or on a consolidated level. So I would say the oncology business will be value accretive for sure from here.
Okay. You've also tied up with partners in China for entry into biologics and biosimilars for emerging markets initially, with specific focus on insulin analogs and biosimilars. Can you tell us what this means for the company in terms of financials or, the strategy?
Yeah, we've always looked at how do we evolve ourselves to the next trajectory of growth? How do we evolve ourselves to what the market trends are? And biologics and biosimilars is something that everybody, needs to get into over the next 5-10 years. Obviously, it requires quite deep pockets. So we need to segment it out as to how it will work for Caplin. So what we are looking at in the initial stages is to focus a little bit more on the drug substance to be outsourced from China and Taiwan, etc., and then for the drug products to be manufactured in-house. The drug product is very similar to the liquid injectables that we do for the US. So there's not too much by way of differentiation that we have there. So we think we can continue to be as asset light as possible when we get into biologics, at least in the initial periods before we start putting in infrastructure on our own once the business starts to scale. So it's early days right now. I think in the next 3 to 4 years, this will start to occupy a bigger share of our pie.
So you said you need deep pockets, right, to get into this business completely. So when you say 3 to 4 years down the line, what kind of capex would you require here? You must be planning for that already. And you had spoken of a capex plan of around 600 to 650 crore rupees when we spoke to you in Q1. How much have you spent in Q2? What is the outlook for the remainder of the year?
Yeah, so over this year and next year, I think we would at a maximum spend around 300 crores more on capex to complete all our existing projects. Now, we live within our means, right? We don't have any debt on our books. All of the capex that we spend on is all funded internally. And due to the robustness in our Latin American business, we are able to put away around 270 to 300 crore per year in surplus, right? So even if it takes for our biosimilar projects and stuff later on, even if it takes extra amount of capex to be done, we will do this internally. We don't have a specific number on where that needs to be right now, but we will get there. We will get there, and we are evolving as well as a company. We will also try and understand what our sweet spot is when it comes to biologics. So, like I said, early days at this point, and we will keep you informed as and when there are developments here.
Vivek, thank you very much for joining in. That's the word coming in from Caplin Point. In the last 3 months, the stock has gained close to about 30-odd%. By the way, IT is back on the radar. Look at the way Wipro, Tech Mahindra, Infosys, these stocks have surged to a 2.5% up move, and this entire week, Nifty IT index is up nearly 4.5% at a time when the benchmark indices are slightly down. So it's a solid outperformance, by the IT majors this week. Even HCL Tech is now up close to about 0.8%. Get into a break. On the other side, we'll talk about stocks like Page Industries, RVNL, Ircon, and we'll tell you why they're surging in trade.
Welcome back. You're still tuned into Trading Hour. Well, the mid-cap index is down almost 500 points right now, but a lot of stock-specific moves on the back of earnings that we are getting. There you go. It's actually at the day's low right now. Page Industries is the stock on our radar. It surged over 5% following brokerage upgrades after a good quarter. Vinny is joining us with all the details. Vinny?
Yes, good morning. So we're seeing 2 upgrades coming in this time from 2 analysts. So, one is Motilal Oswal. They've upgraded the stock to a buy from a previous neutral rating. Target price 54,000 rupees. And the other one is IIFL. They've upgraded the stock to a buy from a previous ad. Target price of 50,000 rupees for the stock. So why and what was so positive about it in this time's numbers? Volumes grew by 7%, while realizations also along with that improved by 4%. Premium mix, higher premium mix, overall mix is improving, and that led to a better performance for Page Industries. EBITDA margins, that also came in as a positive surprise, 22.6%, which was at a 10-quarter high. Other than that, secondary sales have outperformed the primary sales. E-commerce channel that continued to outpace in terms of the growth that they saw, mainly led by quick commerce, and working capital days that also improved to 61 versus 75 days in the month of March 2024. Key con-call highlights also, the company said that they're seeing gradual pickup in rural consumption. Tier 2, Tier 3 continue to witness better growth than metro cities, as well as operating margin, EBITDA. They expect that to be in the level of 19 to 21% annually. So yes, they're maintaining the target for EBITDA level, and that is why a good performance, stock buzzing in trade today.
Oh yes, 6% higher on Page Industries after a long time, seeing that big move on the stock today. But when we stay on, RVNL and IRCON, they are also in focus on the back of Q2 earnings. Did not look so good this time around.
Absolutely. RVNL and IRCON, both of them, not a great set of numbers coming in. Look at RVNL. When you look at it in terms of the revenue of the company, that's seen a decline of around 1%. Margins and profits of the company also have seen a decline. So operationally also, RVNL saw a weak performance coming in. Margins were declining by around 50 basis points on a year-on-year basis, and profits were down by almost 27% on a YOY basis. So yes, subdued growth is something that impacted the overall performance of the company. Let's move on, talk about IRCON as well. Not a great set of numbers there. Revenues down almost 19%, profits seeing a decline of 18%, and operationally also a bit of a subdued performance coming in. EBITDA margin 40 basis point decline versus last year. So weak operating performance. Other income, though it saw an increase, not much of a support coming in on that front. Keeping an eye out on both these railway stocks.
All right, so RVNL and IRCON under pressure. Thank you so much, Vinny, for joining in with all those details. Another stock in focus is Cochin Shipyard on the back of its second quarter earnings. Upasana is here to tell us how did the numbers look. Upasana?
Well, Sonal, overall number misses the street estimates. There was a rise in material cost which impacted margins and profitability of the company. Margins are under pressure for both the segments on a YoY basis. Now, company's key segment, that is shipbuilding segment, which comprises nearly 70% of the sales mix of the company, saw a margin downtick of 210 basis points on a YoY basis. This was mainly due to change in the product mix and no IAC order. Now, higher cost of material and sharp fall in other income led to a low single-digit PAT growth of 4% on a YoY basis. Now, mind you, Q2 is a seasonally weak quarter for the company, and order inflow in Q2 also remained muted. Now, coming to the numbers, revenue stood at 1,143 crore with an uptick of 13% on a YoY basis. EBITDA margins, as highlighted earlier, saw a downtick of 170 basis points and stood at 17.2%. PAT saw a growth of just about 4%. And mind you that the company after Q1 had given a guidance to us that it is targeting 20 to 25% revenue growth for FY25. EBITDA margin it is expecting in the range of 17 to 19%. And company expects ship repair segment to touch 1,250 crore. And as of H1 FY25, it stands at 527 crores.
Okay, all right. That is Cochin Shipyard for you. The stock is lower by 5%. Thank you, Upasana, for joining us with all those details. Let's talk markets now. Earlier today, we spoke to Gautam Shah. He's the founder and chief strategist at Goldilocks Premium Research. Let's listen into his top sectoral bets.
I do believe that the market has got into a base building process once again. And I think the key question a lot of people are asking is whether this is a correction within a larger bull trend or whether this is a trend reversal that leads to a series of lower tops and lower bottoms. I think the Nifty is going to be stable. It's going to be in a sort of a range. 23,800, 24,000 area is a very important support. I don't see that breaking down easily. In fact, I'm more tempted to believe that the market will break out above 24,500 and gradually move to levels of 25,000 to 25,300. So I would be constructive from here. I think I know there is a lot of fear in the system, but the charts which were very, very overbought at the starting of October are quite oversold in the month of as we start November. So I think this is a buying opportunity. Constructive on financial services and Bank Nifty as a pocket, and I feel that this is the index that is possibly going to trigger the breakout on the upside above 52,500, and if that is going to happen, then you will have Bank Nifty testing lifetime highs pretty soon. So I would be very bullish on the financial services as a basket. I think on an overall basis they should do well. So that I think is a very good risk reward idea. So whether you look at valuations, whether you look at charts, I think it's all very well placed. Barring that, I think IT is something where we are again very positive upon. Last 2 days, we saw a lovely move on the IT index, and I do see that index appreciating about 10 to 12% from here. So.
All right, so positive on IT names, and that is one pack that continues to do well. But there's some more pressure on the Nifty that we are seeing. And it's coming from some of these banking names. ICICI Bank, for instance, is at the day's low right now. And if we pull the chart there, you'll see that that's some pressure from the top. NTPC is the other one. We have Coal India as well, which is at the day's low as we speak. But some of the stocks which are doing well, so we spoke about the IT pack. Infosys is one of the top gainers. HDFC Bank has also gathered some pace, so that stock is higher. Some of these consumption names like Britannia and HUL are also doing well. From the broader markets, watch out for ITI. It was the lowest bidder for one of the BSNL projects, and that stock is up around 12% right now. It has gained some more momentum. Avalon Tech, we spoke about the stock yesterday because of strong set of earnings. It is another 12% uptick today on the stock as well. It is at the day's high right now. Motilal Oswal is one stock which is doing well, 7.5% higher. And we do have some earnings reactions which are coming in. NIIT, there's Tejas Networks, Sterlite Technologies. All these stocks are up anywhere between 5 to 7% as we speak. Big moves that we are seeing across the board there. Paytm is also one stock which is doing well in trade today, 3.5% higher. Indian Hotels, the management spoke to us today and they did indicate that the future in terms of the hotels business will be much better than what the industry has seen earlier. So that stock on the back of that commentary is doing really well, 5.5% higher. Vedanta is well in focus. We have Hindalco, which is up 1%. Remember that stock was lower in trade yesterday, biggest Nifty loser actually. But today it has made some comeback, up around 1.1%. But again, we are seeing some fall on the metal names as well from the high. So watch out for that index as well. That also is putting pressure on the Nifty as we speak. So that's the market update for now. But it's also a wrap on trading hours. Stay tuned. Halftime report is up next with all the market action.